Okay, we're back. Yeah, this was a mitigation block setup. As you can see, type 2. But there was a consolidation there. There was a consolidation. So the order block before BMS and the mitigation block, they were mixed up in there, in here. So it was not clear because of that small range up there. This was also a breaker block, right? This, you see these two lows here. Okay, when retail see this, they think of support. So they'll put all their stop losses down here, even just below. So what did the market do? They saw those stop losses, the price came down, took them out, there, type 1.2, took them out. Once they took them out, how did they took them out? They used this order block. This was the order block that they used to sell, to take out this liquidity. Then when they broke market structure, this sell was now in loss. They need to mitigate it. And this is when they mitigated it. I think this was the first one and the second one. So you would have bought here, right there on that breaker. This was also another breaker, but this one here, this one was on the reversal. This one, this black candle here, it was also a breaker, but I don't have the return to breaker. It took out this high, this one, took out that high. And you look at how they broke market structure. Two big candles, yeah, in full speed. This also was another breaker, but also on the wrong side of the trend. Also on the wrong side of the trend. We are still bullish. This was an minor, yeah, internal structure, minor breaker. Sorry, minor mitigation block. This type 2. This is the mitigation block. This is the order block. They are together right there. So you can just sell here. Another mitigation block, again, found in type 2 here. This one, and this is the order block before BMS. Some of them are easy to see, then some are not easy to see. Another one here, this is a good breaker. Higher high, higher low. BMS, this is the order block before BMS. Higher high, so we expect a higher low, then price goes up. There's no higher low. There's a BMS. Okay, so that order block becomes a breaker order block. Look at where the order block before BMS was. This was the order block. That broke this low. But price did not even go up there. Price never went up here. Because they are trapping all the buyers here who bought here. They're trapping them. So they return to breaker, we sell here. Then price comes down. Makes a new lower low, lower high, right? They sell here on this order block. Price comes down. They have new sell orders. They want to sell again, but they don't want to sell low here. They want to sell high. So they put a short-term buy order just to push price to premium to this order block. Then they put their second sell orders, then BMS. So now this becomes a mitigation block. So, yeah, like this, mitigation block. And they only close this here. This is when they close the loss. So remember, these guys have enough money. They can afford to be in loss for a long time. Price can come down here and they will be like in negative 500 million. They are okay with that. They have enough money. Right? They control the market, so they have enough money. They don't care. Even if it's a daily chart, they can be, their positions can be like in negative 1 billion. They don't care, right? They will come back later on, even 5 months later, to close that position because they have enough money. Remember, the market moves about $5 trillion a day. So they have enough money. This is another breaker here. So there was a low here. This was the BMS to make a lower low. This is the order block before BMS. So we expect a lower high. No lower high, but we have a BMS. So that becomes a breaker order block there. And this is our order block before. So here we had double confluence. The order block that before BMS and the breaker. But now let's look at what happened on that setup. What happened? Did they come back to the breaker? So it happened on this day, 29th of April. Now, see what happened. Price came back, no return. Came back again, no return to breaker, no return to order block. Now we have these two lows here. Came back again. So now we have three lows. What would support and resistance guys think? They think of support. We have a strong support there. Next day again, here. Another one here. So now we are having support. Okay. So now this guy, what are they going to do? They're going to start buying a lot, even buying here, putting their stop losses here and down here. Right. What is the market doing? They are engineering liquidity. That's what they call engineer liquidity. They're creating a fake support so that people will buy and put their stop losses down here so that they can create enough money. Once there is enough stop losses here, boom, take them out and return to their order block where the setup was supposed to be. Take everyone out, return to order block, price goes up. So this is, if you see something like this, do not buy here. Never buy. Wait, especially if there's upcoming high impact news. They're going to use that news to do this. They'll use news to do this. To take all these lows and then return to order block. So here you're going to put a buy limit. You're going to put a buy limit here. If you see that there's upcoming news, if you see that you have a setup like this, and this is the breaker, and even maybe order block here, and price fails to return to order block, fail again, fail, and there's news coming up, they're going to use news to push price down to take out all these lows here, everyone here, and then return to their order block or breaker, and then price goes up. That's what they would do. That's how the market engineers liquidity. And I think they did that today. Yeah, they did that today. I'll go to the chart and show you. This was a mitigation block and order block together. This was another breaker. The breaker was made on this day. They came back 3 days later. Another breaker here again. They came back the same day. This one again, another breaker that took out this high. They came back 3 days later. This one, do you see how they break market structure with those breakers? 1 or 2 big candles to trap everyone. So it's the return to breaker. Another one here, return to breaker. So what they do, sometimes they do this. They create a fake support first with these 3 lows. Once everyone is now buying and putting their stop losses down here, then they use this order block to push price down, to take out all those lows, and then BMS, return to breaker, and they go. These guys are very smart. And evil too, yeah. So all they are trying to do is get our money. That's all they are trying to do every day. To trap us and to take our money. You see this one, this was pound USD. This breaker was made in February. They came back in June after about 3 months, yeah. So meaning this was a huge loss for them. But like I said, they have enough money. Imagine if they had entered with 1 billion here. This was a huge loss, this one. But they have enough pockets to wait. They have enough money to wait. Okay, there was a lower low, lower high, BMS, lower low. So we're expecting a lower high somewhere here. But then they broke market structure with a new higher high. So meaning we're now bullish. This is our order block. We expect a higher low. There was no higher low. There was a BMS. So this order block was used to take out all these highs. Everyone who was swinging here was taken out. So then they came back later here to mitigate. They came to close their loss here. This was a mitigation block. As you can see, the type 2 here. This is the mitigation block. This is the order block together. Same thing here. Mitigation block here, this black candle, and this is the order block together also. I think this is the last example. Another breaker here. This one. Order block used to take out this low and then BMS becomes a breaker. But now this one was now on the wrong side of the trend. We had a reversal here. So this one was now on the wrong side of the trend. So what did like I told you about order blocks, once they are on the wrong side, they are going to be violated or used as lower low or higher low. But do not write RTO here. I think Marcus was doing that. I was correcting your charts. Once the trend is changed, it's no longer RTO. Because why do I say that? Because once you are live, you never know. We don't know whether they're going to be use this as a lower low, or they're just going to price will just violate the order block. We don't know that. It's like catching a falling knife. You see here, you see this whole momentum coming down here. That's like a falling knife. So you never know whether this breaker is going to hold price or not, because now it's on the wrong side. Okay. So you don't buy here because price can just come and just take out your stop losses, especially with this huge momentum. So just wait. As long as the order blocks were never tested, but now they're on the wrong side, either order blocks or breakers or mitigation blocks. Once they're on the wrong side of the trend, don't even look at them. Don't look at them. That's what happened here. And this was a breaker setup here. And another breaker here. So even when you mark the charts, once that's why I put emphasis on market structure. The moment you see a reversal up here, scratch this. It's no longer a return to breaker. We are now looking at the downtrend. Yeah, what were you saying, Marcus? I think I interrupted you.
No, all good. I just wanted to say you're right. I did this. I marked the order block in the wrong trend direction, and you corrected this one.
Okay, that's good. Okay, I think this is the last example. Yeah, now this one doesn't matter. Let's go to the charts. This is NASDAQ, US 100 or NASDAQ. This, if you look at this uptrend here, okay, this was a type 1. So like I said, breakers are found in type 1. Mitigation blocks type 2. That's it. No mitigation block in type. No, okay, let me rephrase. On some rare occasions, you might see both of them. Yeah, on some rare occasions. Something like this. Yeah, something like this. This is the breaker. This one. This is the breaker that took out this high, right? And this is the mitigation block. On rare occasions, you see this, right? So this took out this high. We were supposed to have a higher low, then price breaks market structure, but we did not get that. So we have type 1 here and type 2 here. Yeah, so on rare occasions, you can see on rare occasions, you see this. They will mix them together. Anyway, this was a breaker block. This one. This one. Higher high, higher low, BMS. You expect a higher low, no higher low, a BMS. So this was the breaker. But they did not return on the same day. They came back, I think this was 2-3 weeks later here. And they used, okay, now they used the breaker as a higher high. To use it higher high, higher low, higher high. But still, I wouldn't have sold here. I don't sell in an uptrend. This is an uptrend. I don't sell in uptrend. I only buy. I would wait for a buy here. I think this was the order block. This was a fresh order block. Yeah. Here. And we have another beautiful breaker here. This one. Right. You see what happened? Lower low, lower high. Small consolidation, break market structure. What do? You mark your order block before BMS. So why? Because we expect a lower high, then a lower low, but there was no lower high. What happened? Violent BMS, broke market structure. So that becomes a breaker. And you can see how they reacted on the breaker, the reaction on the breaker. This order block that broke this high was not even touched. They used the breaker. Right. So this example is this is the breaker here. But this was okay, this was a combination of both, a breaker and the order block before BMS. This one. They were together. So the breaker is here, the order block is here. So the price came back to mitigate the loss and also to the order block. This was a breaker here. This one. This high was taken out here. That was a breaker. Right, and then okay, so I want you guys to use the Zoom. I want you to annotate on this chart. There are two breakers that I want you to mark. One is bullish and one is bearish. So one is like this, and one is like this. So can you mark them? It's a clear return to breaker, not return to order block down here or up here. It's a return to breaker. Can you identify them and mark them? They are right, they are here. They are right in here. Can you try to identify them?
You said one is bullish and one is bearish?
Yeah. Okay, this one here. Okay, very good. That's the one. That's the first one. That's the first breaker. So lower low, lower high, BMS, you mark your order block, lower low, you expect a lower high. There's no lower high, there's a BMS. So this was the return to breaker right here. Return. This was the order block before B that broke this high, but they did not even come up down here. They used the breaker. Now the second one is a bearish one. Okay, so it was this one. Yeah, not really. Okay, so let's see. The way, okay, I think here's what happened there. So first we have this bigger one here. This one. And I think the one that you marked, right. So I think what I just showed you, that on rare occasions you get a breaker and a mitigation block. This is what happened here. So this was a breaker. This was the return here, right there. They return to the breaker, right? Now this is the breaker, and this is the mitigation block, and this is the order block before BMS. 3 confluences at the same area. But what did they do before they went up there? They started to engineer liquidity. So this high, then this high, then this high. This was a fake resistance. And we even had a BMS. Look at what happened. That setup was crazy, man. There was even a BMS here. So meaning most traders sold here and put their stop losses up here. But I'll teach you about liquidity in the lesson after the next lesson. Yeah, in lesson 5. So when you see something like this is where you don't sell when you see this double top here. So once they saw this BMS, I think this is when Trump tweeted something. I remember this day. When he made that tweet, then price went up, took out all these stop losses, right, returning to the order block and breaker and mitigation block, then drop, huge drop. This setup was a limit order setup. This was a limit order. This was not a setup that you would go to 1 minute. No, this was just a limit order setup. Yeah. So be careful when they start to do this. When you have, okay, I think I'll teach you in the, so it's okay. We'll do the lesson. Lesson 5. We'll talk about it in the, yeah. So that's what happened there. That breaker, okay, and mitigation block.
Sorry, I have a question about that over here. So why, for me, this is a type 1 supported entry, right? And then why would this be mitigation? Because we have type 1. So wouldn't this just be the order block? Like,
Yeah,
isn't this just going to be a breaker instead of a mitigation block?
Do you see that?
Yeah.
Yeah. That's the one I told you that on rare occasions, you can get a breaker
Okay.
and the mitigation at the same level. On rare occasions, you won't see this often on rare occasions. So this was the mitigation block here. And this was the breaker here. And this was the order block before BMS also. Right. So the confluence was right here. That's where the setup was going to be. But majority of the time it's just a breaker, mitigation block. And like what did I say about mitigation blocks and order blocks? They're always together. Always, most 95% they're always together at the same level. Okay, let me look for one more example of breaker. This one was the one, this was also a breaker, but in a consolidation. This one. Right. Here. Higher high, higher low. This order block was used to take out this high. Price came down, but there was no BMS yet. Then this is when they do the BMS. And this was the mitigation right there. This was the mitigation. Where was the order block before BMS? This one. Where was the mitigation block? Also here. But price did not even go up there. They only use the breaker here. So sometimes it's a quick mitigation, quick, up and down, and they're gone. If you miss it, you miss it. This was also a mitigation block, but they used the order block. This was a return to order block. Okay, let's see if there's another one. Another example. can be let's see. Oh, this was the breaker. There was a breaker here. This is the order block just before the BMS, just before this BMS. And when price broke market structure, it was a breaker. Even though price was now on the wrong side of the trend, but the breaker worked a little bit. This is Nasdaq. Even you get it, yeah. So it worked a little bit. But remember, if you are trading Nasdaq, this thing is volatile. It's volatile. Even though this was a counter trend, it would have given you about what? How much is this? 1,900 pips. Yeah. Nasdaq is volatile. So if you know what you're doing, you can trade both ways. But I would recommend just buying here. Just buy. Okay. This is the last one. Yeah. This is another breaker here. This was like a textbook breaker here. Yeah, a textbook. This one. Lower low, lower high, BMS, order block, violated, return to breaker. And then later on, they came down to the order block down here. Yeah, so it's also possible that they will first return to breaker, then later return to order block. Remember, I'm giving a blueprint, but it doesn't mean that what I'm teaching you is going to happen every day. Sometimes they have to change it. They know that people are trading ICT. They know about ICT. So sometimes they have to change things a little bit to confuse you. This is why you need to practice a lot. You need to practice a lot to see all the different variations of breakers, mitigation blocks, order blocks, how they are using them, with market structure. You need to practice a lot. Okay, anything else here? This breaker here, yeah, this one, it took out this high. Then there was a BMS violated, and this was the return. But price was now in an uptrend, so it was just used as a short-term higher high. Okay, and currently we are now here. This is where we are right now. With this return to order block yesterday. And today we had, yeah, today the market was volatile. Oh my God, today it was just crazy. The market was just crazy. So they returned to this order block right there. Then today, this was the setup. It was right here. The setup was right here. You'd have waited for this BM. You want this BMS to be sure that price is now bearish. This one. And this was the BMS, and this was the return to order block here. There was the entry. And how many pips? 2,800 pips. So if you trade Nasdaq, man, you're going to make a lot of money. But you have to be very good at what you're doing, because it's volatile. Even the stop loss is also big. Your stop loss has to be big also. It was here. If you sell here, above here, the stop loss is about 100 pips. So you also have to be really good at what you're doing. But once you guys have mastered what I'm teaching with those other pairs that are less volatile, you can trade Nasdaq if you want. You can trade it. But I noticed that when it comes to volatile, non-volatile pairs, it's sort of a character thing. Those people who are more confident and go-getters, they can trade volatile pairs. Then those guys who like comfortable things, they are just comfortable. They go for, the less volatile, the ones that give 30, 40 pips a day. That's enough for them. One of the problems with volatile pairs is your stop loss has to be big. That's the problem with volatile pairs. You see, for this setup here that I entered in the morning, right? This was the setup was here. This would have been 4 pips stop loss, right? But for 4 pips, I'm risking only 4 or 5 pips. But for Nasdaq, 100 pips. You see the difference. 100, yeah, about 100 pips. So most people are not comfortable with that. 100 pips stop loss, they're not comfortable with that. So they just end up sticking to those other pairs. These two pairs, USD ZAR, is for me, I trade both. This EU, UJ, less volatile. I can put my 5 pips stop loss. Gold, ZAR, those are volatile pairs. I have to risk more. I risk more a bit, yeah. 25, 30 pips. But in a day, gold can give me 200, 300 pips. A stop loss of 20 pips will give me 200 pips, which is about 1 to 10. Yeah, 1 to 10 ratio. 1 to 10. And today, yeah, even today there was today they gave us how many pips? 500 pips. Let's see, where was the setup? The setup was here, right? Yeah, this was a breaker setup today. There it is. Higher high, higher low, higher high, violent BMS. This was your order block up here, but they used the breaker here. So from this breaker to this high, it was about 50 pips. If you are, what can I say? If you really wanted to be safe, 50 pips. But even with the 50 pips, the reward was good. 500 pips. It was good. That was about what, 1 to 10 ratio. Yeah, 1 to 10 risk reward. It was still good. If you had risked $5, you would have gotten $50. Yeah. If you risk $50, you get about 500, right? If I'm not mistaken. I think so. If I miss not, yeah. So gold, sometimes they really good. Yeah. So it's like I said, it's up to you. If you like safe things, stick to UJ, EU, USDCHF, those less volatile, stick to those ones with 10 pip, 15 pip stop loss. So you can risk less. But if you want high volatility stuff, then you can go for gold, USD ZAR, USD Mexican, NASDAQ. You can go for those. But I recommend that you should be now, by the time you should trade volatile pairs, make sure that you're good. You know what you're doing. You are really good. And you do a lot of back testing. But anyway, yeah, so like I said, we had a breaker setup on gold today. That was a breaker setup. This one was just an order block setup, yeah. But also, look, this was a breaker setup also. This counter trend was a breaker. Lower low, lower high, lower low. This is the order block. BMS, return to breaker. That was a breaker setup. So yeah, this is the lesson on breakers and mitigation blocks. Any questions?
Nothing on my end.
No, same for me. I have to watch this video, I think, several times.
Okay, so the homework is going to be 50 charts on order blocks. So you have to do order blocks first before you jump to this lesson. And after you're done, then you do 50 more charts on. Okay, so the lesson for breakers and mitigation blocks, you're only going to mark the market structure, right? And return to breaker or return to mitigation block. Don't mark return to order block here. There is no return to order block if you're marking this. The first homework is the one which is return to order block. But the second homework is just only this. If you see something like this, where price return to the breaker, then order block. This is a return to order block, not a return to breaker. The breaker failed. They used the order block. So this will be a RTO, not return to breaker. So 50-50. Then so I'll give you the whole week to practice until next week, month. Yeah. So at least if you guys are too busy, it will give you enough time to do charts. If you can do 10 a day, that's okay. That's enough. 10. Then by weekend, then you do the rest, the 30. Then you're done. Right. So I recommend you choose at least 2-3 pairs that you're going to focus on. Now, don't pick many pairs. It's going to confuse you. Pick 3 pairs. Why? Because I want you to study the last week's market structure, the week before last week also. study how price was moving, how it was respecting the order blocks, how the market structure and the order blocks were used, how the breakers were used also. What was the setup on lower time frame? Go back and study that and take screenshots. Also this week, what's happening? Okay, every day before you sleep, try to look at your 3 pairs. Look at the market structure and anticipate what might happen tomorrow. Take screenshots. Then the next day, see how price is going to move. If it moves the way you predicted, that's good. Take another screenshot. If it moves a different way, then also take a screenshot and see what happened. What really happened? Why your setup did not pan out. And then, yeah. But remember, like I always say in the channel, in as much as we predict where price is going to go to, at the end of the day, we react to what the market does. You don't tell the market what to do. The market tells you what to do. That's how we trade. Okay, I think that is all for today. I'll be waiting for the homework throughout this week. So enjoy the rest of your day and the rest of the week. The next lesson will be next week, Monday. Okay.
All right. Thank you. Same to you, and Merry Christmas.
I forgot about that. You too, man. You too.
Merry Christmas, you guys. Take care.
Are you guys allowed to celebrate? You know, with the COVID and lockdown and stuff.
Well,
In Dubai, yeah.
In Dubai, yes. Okay.
Sorry.
And Marcus?
I'm from